Hi and welcome to another daily recap. So today I'm going to recap day 154 and it's December 9, 2024 Monday. So let's start with the euro dollar from the daily perspective and let's jump on to the GU. So to summarize, I didn't get any trades on both EU as well as GU on this day. So let's zoom in and see what happened on both EU and GU and why I didn't get any trades on this day. So this is the euro dollar, the daily chart. The swing structure is bullish and the swing structure is bearish, internal is bearish, and there is a strong buy sell liquidity sweep here, which you can see even from the zoomed out version itself. So zooming in, you can see that the price had swept the strong internal high as well as this buy sell liquidity, which means price can seek out some sell sell liquidity. So that sell sell liquidity can be either the sell sell liquidity below this demand zone, or it can be some kind of lower time frame sell sell liquidity, and the price can take after the price takes out that sell sell liquidity, it can start to push down because price had mitigated into this demand with a strong rejection. So this could be an driver for the price to push further up and make a bullish high boss. So this is 4-hour time frame where you can see that the internal structure is bearish and the price had swept the strong swing high. So and it has also chalked bearish, which means, and one more thing to note is that there is no demand to the left from which the price can react upon, so which gives me an additional confluence that price can push further down. So what I'm expecting is since the price at chalk bearish and this fractal structure is still holding, I can expect this all these demands to hold, all these supplies to hold and push the price down till the price reaches the 4-hour sell side liquidity or eventually the daily target. But I'm not expecting the price to go all the way to this daily target because that requires enormous amount of liquidity and enormous amount of money to be involved. But what I can currently expect is I can expect this fractal structure to hold and this fractal structure to hold and push the price down to this 4-hour sell side liquidity below this one. So, and one more thing to note is that price can push further up because this supply is being unmitigated. So price can take out this buy sell liquidity first and mitigate into this unmitigated supply before pushing down. So anything can happen today. So that's why both the biases in the daily as well as the 4-hour is neutral. So I'm just going to play the session direction. Whichever direction the market goes, I'll just trade with that displacement. So coming into the H1 chart, you can see the price, the swing structure is bearish, internal is also bearish, which means the price is in phase A. So you can see the internal is bearish and this could be the buy side liquidity which the price can take and then push the price down. Or if I see from the H1 perspective, there are some other buy side liquidities like this Asian quarterly high and this Asian high. So price can take any of these buy side liquidities and start to push down to take out all the low resistance liquidity below. That is case 1. This is not for short, this is for shorts. And that is for case 2. That is for case 1. And for case 2, I can expect the price to flip this demand zone. If the price flips this demand zone, then I can mark this as my flip zone and take trades from this flip zone targeting all these buy side liquidities. But I must also remember that there is an opposing demand which is a bit high probability because it was formed via sweep of liquidity and it has also got inducements associated with it. So this demand is a bit of high probability. So when the price reaches this demand, I must had break even my trade already. Otherwise, it could cause a major bullish reaction and it could stop me out and it could be a losing trade instead of being a break even trade. So session update at 13:35. Initially, when the price took out the buy sell liquidity, I expected the price to rally down, but later I realized that there was a strong bullish push up, which indicated that the demand is maybe in control. But in my mind, there is always this thing, always a thing is running. That is, this bullish IBOS could be, a pullback to mitigate into the 4-hour supply, or is this an actual, the market structure shift to provide me to, actual market structure shift to take out the weak swing high. So both of these things were, fluctuating in my mind. But that's why we got M15 to guide us, M15 for strong confirmation before taking an entry. At 1440, price started to push up. So now I can say that the price wanted to push further up in and probably take out the weak swing high, and it has also formed a beautiful equal lows right here. So I can expect probably tomorrow price can take out this equal lows, and if possible it can chalk bearish, which can give me a beautiful POI from where I can trade, and then target the the low hanging fruit or even the weak swing high. So that is a different story for tomorrow. So let's jump into GU for now. So in GU, from the daily perspective, the swing structure is bullish, internal is bearish. The price had mitigated into the daily demand, and then it has made an bullish IBOS. So if I zoom in, you can see that the price had mitigated into this fair value gap, and also rejected strongly of this fair value gap and made a buy side liquidation. So now I can expect some sell side liquidity to be taken. In other words, I can expect some internal resistance liquidity to be taken out. So here I can see the internal this is actually 4-hour chart. The swing structure is bearish and internal is bullish. So I can expect the price to push down to make an internal pullback, or to get the internal resistance liquidity if I see from the daily perspective. So zooming in, I can see that the price had mitigated into the 4-hour supply, and it had chalked bearish, and it has respected this supply and then pushed down. So now price, after pushing down, it has pinned again, is going to this supply. Probably this supply could be respected today, and the price can push further down, taking out, making a deeper internal pullback. So this is the H1 chart. The swing structure is bullish, internal is bearish, which means that we are in the phase C, and the price had mitigated into the higher time frame supply, which gives us more confidence to play the phase C shorts. So what I was expecting is, this is the 4-hour supply, so I can't take directly trades from the 4-hour supply. So similarly in EU, similarly in GU, like the case was in EU, I was having a ton of buy side liquidity here. So I was expecting the price to take any of the buy side liquidity and then chalk bearish, so that a fresh POI would be formed, and then I can look for trades. Otherwise, the second option that I had in mind is that this demand is a weak demand because it got already mitigated twice, and this is the third mitigation. So if the price flips this demand, then this would be the flip zone from which I can look for trade. So that was the case too that I had in mind, very much similar to the GU EU analysis. But later I realized that price had swept the sell side liquidity and then made a huge push up. But the thing here is, this push is made without any pullback, without any leg inducement. So what could happen is that this could trap a lot of FOMO traders, and a lot of buy side liquidity could be resting below here, which the price can take out. But just for my strategy to play out, just for the odds to play out, I just wanted to involve in this trade, and then look for opportunities. If the opportunity is presented, then I was ready to take it, because I'm using an M15 chart as my low time frame, so which has much more high probability of playing out rather than using an M5 or M1 chart. So I can see this as a sell side liquidity sweep and a strong displacement. So I can recognize this as the phase B longs, and high time frame is supporting the low time frame idea partially because in both the 4-hour chart as well as the daily chart there are some reasons why the price might go up. So high time frame supporting the medium time frame idea, yes, and it is an OT, no. Why? Because price did not reach the discount prices before pushing up. So this could be a false trap, and ton of buys sell liquidity could be generated, and the price can push down to take out all this sell liquidity, and then it can make its actual move. So it's not an OT, but it's in line with the medium time frame order flow, and there are 4 out of 8 criteria met for this POI, so which means this box is also ticked. So 3 out of 4 conditions ticked, so which is a medium probability to high probability trade. So what are the other confluences? So the supply chain, the demand chain is getting respected, and there is a time-based liquidity to target, that is the New York's high as well as the previous day high, and it has also got a structural liquidity to target, that is the week swing high. So what are the risk factors available? So there is an Asian high below, that is a sell liquidity, and this leg does not have any inducement, so the only inducement can be below this low, which is another sell liquidity, and this is totally counter internal. I'm trying to play longs, and the internal structure is still bearish, which means it is counter internal, and it is partially the high time frame is bearish, which means I'm partially playing opposite to the high time frame bias. And one more thing is that there is an opposing supply. So if the price reaches this supply and if it stocks bearish, it can just continue to push down to take out the weak internal low. So these are the risk factors which I considered while placing the trade. So coming to the entry, there is no lid. So all I can do is wait for an LC2A or LC to be formed, or wait for the M15 confirmation entry. At 11:38, with the price clearly making a bullish eyeballs, I can now look for longs targeting the weak swing high. I still have a chance as the price can come down to mitigate the demand order flow, but that is definitely not valid today. Yeah. So at end of the day, what I came to know is that price mitigated into the supply. So after mitigating into the supply, then it is low probability for me to take longs, because this supply can hold, and it can flip this demand and continue the internal order flow by taking out this weak internal low. So this is a high probability demand, high probability supply, which I don't want to mess with. And yeah, one more thing to note is that price had mitigated into this supply, which means I can look for shorts now. So the only thing that I expecting from the market is to make a bearish chalk to confirm the bearish displacement during the session, and once it is done, I'll be having a fresh POI from which I can look for lower time frame entries to target the weak internal low. So in that case, there would be again opposing demand, but I would neglect that opposing demand. Why? Because the internal structure is bearish, and I can look to target the weak internal low, which is much more high probability than considering the demands, because the demands or supplies will be valid only if the market structure is in favor. If the market structure is against those supply and demand, then they would be just acting as an a bouncing point, or a pullback point, and it can start to it can start the run phase once it had trapped the early buyers or early sellers. So in this case, it is early buyers. So yeah, that's it from my side. So there is no trades on both EU as well as GU. So see you tomorrow on December 10, 2024. Until then, cheers guys. Bye.